Welcome to Balancing the Ledger, where tech and finance intersect. I'm Robert Hackett.
And I'm Jen Viechner.
And today we're here with Nima Gamsari and Tim Myopoulos, the CEO and the co-founder of Blend, and the president of Blend, which is a fintech company that is pretty highly valued. Thanks for being on the show, you two.
Oh, thanks for having us.
Thanks for having us.
So tell us a little bit about Blend. What are you doing?
So we started Blend around 7 years ago. We saw that most of the processes of getting financial services product, in particular a mortgage, were very paper-based, very manual, very difficult for consumers to engage with. A lot of handing people documents and waiting a week for them to get back to you. And we said, we think we can bring technology to this space. I'm a technologist by background, and building software is something that I think could really help make the space better. Been building it over the past 7 years. Our business model is we basically partner with financial service institutions, with banks and lenders of all sizes. And we offer a process for them to work with consumers, white labeled, using our product, to aggregate the consumer's financial data. The system reviews that information in real time and gets them back an answer in real time and streamlines the process from there. Today we have about 150 banks using our software, and we do about $3.5 billion a day in mortgage applications.
Tim, you were previously the CEO of Fannie Mae, the mortgage giant. What opportunity do you see in Blend?
Well, I think in the course of my career, I've worked in 5 financial institutions. And when I was leaving Fannie Mae, my view was that the future of financial services was going to be based in technology. I had spent the 6 years that I was at Fannie Mae as CEO really focusing on how to bring the mortgage industry into the 21st century, how to create the conditions where lenders would actually adopt digital technologies, make that better, faster, cheaper for consumers, make it better, faster, cheaper for lenders, but also actually make it better for the ultimate investors like Fannie Mae and Freddie Mac, and to protect the taxpayers. So I was really interested in going and continuing that work and really focusing on the technology space. And as I looked around all of the fintech firms that I knew about, I certainly thought that Blend was among the very, very best.
You recently raised a new round of venture capital, I think $130 million, something like that. Do you have plans to expand beyond the financial services space, or what is Blend going to look like in the future in your vision?
I think there's still a lot of work to do on the mortgage process. There's still a lot of manual processes that could be things that are done using data instead of documents. There's still a lot of friction we can take out of the process to make the consumer's ability to get a mortgage a lot better. But then beyond that, I think sometimes it's easy to forget when I'm so in the weeds that the mortgage is usually part of a much larger home buying process that a consumer is going through. And that's a pretty psychologically important process for a consumer, but also now it's become a very onerous process because there's so many different things that you have to think about in that process. And so what we're thinking about is how do we not just make the mortgage process simple, but help bring together all the other pieces for the consumer so they can have an amazing experience all the way through. And so part of it's going to be making the mortgage itself simpler and spending a lot more energy and time on that. There's also, I think, a broader need in financial services. When we were first getting into this space, I was wondering why banks didn't have this technology yet. And I think part of the reason is that, if banks wanted this technology historically, they had to all build everything themselves. And so we're finding there's just a lot of places where they've built stuff, and there's a lot of places where they haven't built stuff. And things like other loan products like auto loans and deposit accounts that we're starting to think about, how can we help the consumer across their entire life journey and not just the home buying journey? So getting into these other products and making those processes digital, simple, and transparent for consumers along the way.
Who is most likely to get a mortgage these days?
Well, millennials are the biggest generation in American history, and almost like everything else that millennials have done, and I've got a couple of my own, they've delayed everything, but every study I've seen of millennials is they have the same aspiration to own homes as previous generations. The real question is, will they actually be able to go execute on that aspiration? And interestingly, the kinds of homes they are interested in is not necessarily the hip urban apartment. They actually want to live in suburban homes like the ones that they grew up in. So a little bit counter to what the myth is about how millennials want to live. But then there are communities of color will actually be the largest proportion of new home buyers in coming decades. And for that reason, it's all the more important that we figure out how to best serve those communities.
You aspire to do a sort of one-tap kind of process for this stuff. How achievable is that? It seems kind of difficult, to be like, push a button and boom, I have a mortgage.
Consumers are getting more and more access to their financial data. And we're seeing this in action with companies like Plaid. We're seeing it being used at companies like Robinhood. We're seeing it being used by companies that are helping you aggregate your finances. We're taking really the same approach and saying we're going to help the consumer aggregate their data. And if the data is already there, if you already work with that financial institution, on the way here, we were talking to one of the people in the lobby, and he was saying he just applied for a loan with a bank that he already banks with. And it took 2 weeks to get an approval. And that's the type of thing, they already knew him. They should have been able to instantly look at his history of cash flow, look at his history of his payroll deposits into his bank account, and say, yeah, this is what you're approved for.
But I also want to emphasize it also doesn't mean that the quality of the loan is somehow inferior to something that was done in a much slower manual process. I mean, we're still, we're still searching for and collecting the same data that would have been collected in paper form previously. We're just able to do it much faster. We're going to the primary sources. We're going to people's bank accounts because they give us access to them. And the lender and then the ultimate investor in the loan can see actually what was the true financial condition of the borrower.
Sounds like you have insight into a kind of a broad swath of data. There's a lot of, both mentioned the financial crisis. There's a lot of talk now that this cycle may be ending and we may be headed for another recession. Do you have any insights into the data that you're seeing in terms of the likelihood of that happening or when we will see a downturn again?
I don't have any particular prediction as to when the next recession is coming. What I would say is that I think that, at least in the housing market, I think given home price appreciation, given the quality of loans that have been originated over the last 10 years, and given some of the risk management techniques that are being applied both at the origination and servicing stages of loans, I'm much less worried about the state of housing and home prices than I was 10 years ago. I think if there is when the next recession comes, we'll be able to weather that actually pretty well from a housing market perspective.
One thing we love to ask our guests on Balancing the Ledger is for their thoughts on cryptocurrencies and blockchain. I'm wondering whether there are any applications of this technology to real estate or mortgages or the housing market that you have been looking at.
Yeah, one thing that I'm interested in, and Blend is thinking about working with some partners on, is this idea of digital identity and digital financial identity using blockchain to power it. How do we give consumers access to their own data? Doing that's very difficult, and having that be a thing that they can use and reuse and keep up to date is also very difficult, and it becomes this very cumbersome process for both the consumer and the institution receiving it. So I think that there's been a few efforts in that space, and there's going to be probably, in 5 or 10 years, I expect consumers will be able to frictionlessly access their financial data and have control over it and be able to share who can use it and who can't use it. That's probably a space that's going to evolve pretty quickly over the next maybe 18 to 24 months, and hopefully it will become mainstream in the next 5 years.
When is the right time to get a mortgage?
Rates are really good right now. We're seeing a big uptick in refinances on our platform, just because I think there's a recent announcement in the Fed, and so I think people are saying we're going to go and we're going to get a mortgage. But for everybody else, buying a home is a very personal decision, and it's like, where are you going to be for 5 or 10 years? Where are you going to be? Where in terms of your career in 5 or 10 years, not just physically. And it's something that I personally got my first mortgage while I was at Blend in the last 2 years, and it was something that I think hopefully I'll be able to hold on to for a long time, and that home I'll be able to hold on to for a long time.
One more quick question. I imagine you'd be an asset for any bank to have in-house. Why has a bank not just acquired you outright, and do you think you'll eventually be owned by a bank?
Having run a big financial institution that historically had spent a lot of money building custom-made programs, you start to realize that it's a huge investment, and it's not just the initial cost, it's the maintenance cost over a long period of time. I think our customers have realized that they need to have a great consumer experience that they can use, but that to build that and maintain that themselves is hugely expensive, and that they can actually get that at a much lower cost and at a regular state of excellence by relying on somebody like us, where essentially every institution that's using us is spreading the cost of having that kind of experience across a much bigger base of users. So, we are able to make investments in our software that make sense for us because we have many customers. If we were serving just one customer, that would be a much harder thing to justify.
Excellent. Well, thank you both so much for coming on the show.
Thanks for having us.
Really enjoyed it.
I'm Robert Hackett.
And I'm Jen Viechner. And for more Balancing the Ledger, go to fortune.com.
See you next time.